Welcome to India Inc.'s Dream Budget right here on NDTV Profit. Fuel supply risk and precarious financial health has posed a serious challenge to the power sector, and the slowdown of which is causing impediments to the overall growth of the economy as well. There's been a slow-moving reform process in the power sector, which is why investment and attracting investment in this sector also becomes a key challenge. In that light, all eyes will be on the Finance Minister for the Union Budget 2013-2014 and what he can do to spur growth in the power sector. Joining me in this discussion to put forward and highlight the expectations of the power sector, I've got with me Mr. Ravi Uppal, the MD and CEO at JSPL, as well as Mr. Kameswara Rao, Leader Energy Utilities and Mining Practice at PwC India. Gentlemen, thanks very much for taking out the time and joining me in this discussion. Mr. Uppal, I want to start off with you first. While we will talk about the power sector, but keeping in mind what has happened the entire last year and how the government has started off with this reform process, are the hopes lighting up that, there could be something more substantial done for the power sector as well?
Well, the power sector, I would go to the extent of saying this is the prime mover of the economy. But unfortunately, everything has not gone on well for the power sector. We did see some bright spots during the 11th plan when it came to the power sector. Some initiatives were taken. Private sector was invited to come and participate in the development of the power industry during the 11th plan. And a substantial amount of capacity came from the private sector, and it gave much needed impetus to the growth of the power sector. But once we got into the 12th plan, starting from last year, we find that the pace of activity within the power sector has come down. Power industry has had huge issues with the availability of fuel. And not only that, even some of the projects which were being executed by the private sector, we found that the finances were not coming. There was serious problem of logistics, and they were not even able to get the fuel supply which they were assured. Some movement has taken place when it comes to the FSA, but I would say that it is not to a satisfactory extent. Government is assured that they will get fuel to the extent of 80% of the 85% PLF, which basically means the unit will have to run on a short basis only to the extent of 68% of the rated capacity, and that doesn't make any business sense. So I think the power sector today looks very distraught. They feel very unsure about the availability of the fuel, which is a key component. And going forward, for the new units to come up, we have serious issues about availability of land, availability of water, and above everything else, the environment and the forest clearances are also taking inordinately long for any new projects to come up. So I am very worried that the kind of tempo we had built up during the 11th plan and went to the extent of adding 56,000 megawatt of capacity, that in the first year of the 12th plan, that kind of momentum is nowhere to be seen.
Mr. Uppal, while you've highlighted concerns from the power industry, looking at the government impediments and hurdles in terms of the deficit that they're running, the revenue accretion that's in question mark for the government itself, fiscal incentives are desired by all industries, by all sectors. In that light, and in light of the shortfalls that the government is facing, you think that it's going to be realistic enough to expect a lot from the government this time?
Well, when it comes to the fiscal incentive, where is it that the government can give benefit to the power producers? That if you look at, there is some component. One is the capital cost. How is it that we can reduce the incidence of taxes, whether it is excise duty or other taxes which are applicable, they can be brought down so that the cost of capital equipment could be brought down. And likewise, for the final user, what is the kind of electricity duty that we pay? Which is paid. That's another way to bring down the rate of power tariff and thereby incentivize people to sort of buy more power, which is becoming a big issue today. If you look at the major cities, the cost of power is simply prohibitive. So I think the government has to see what are the kind of incentives they can get, because this is a very core sector, and this is a sector which will enable the rest of the economic sectors to grow.
Yeah.
So if this sector is not held by way of fiscal incentives, I'm afraid that it will seriously impact the growth of the consumer industries as well.
Mr. Rao, I want to get you in. Mr. Uppal highlighted the various impediments in the sector and it needs immediate attention right now. And lots is being expected for the government to now take a serious stand on bringing about reforms in the power sector and making sure that the growth once again gets spurred in.
Yeah, I agree. And I think you need to look at both sides of the equation. The fuel supply is certainly an issue, but it can be really addressed through reflecting it in tariffs. Today what we have is a system where it is set at a state level, whereas we are dealing with fuel supply at a national level. We need to really bring these two ends to meet. Now there will be a cost implication when you're reflecting global commodity prices into your domestic market, because let's face it, there will be shortfall locally. But the big challenge is, of course, is how we reflect into retail tariffs, and that's been an issue not just regarding fuel, but even for various other reasons over the last 7 to 10 years in many states I have seen. The big challenge is the sector is still not able to cover its costs. So unless we are able to make it financially sustainable, which in part relates to improving efficiencies, so therein private participation in distribution, a number of states have done a good work in Maharashtra, in Madhya Pradesh, and certain other states have started now. But there's still a long way to go, and that's effectively the only way to get new money into the system through distribution reforms.
Mr. Uppal, you want to come in on that?
Well, I agree with him on both the observations that he has made. But I think one of the first things that we have to ensure is that the private sector, which has invested huge amount of money to set up capacity, that their projects remain viable. When you are giving the guarantee through FSA, which is equivalent to 68% of the installed capacity, the economics simply doesn't work out. And the second is the pass-through of the fuel cost. But there again, we have serious anomalies. Think of a power project which is being set up at the pit head, and as against that, you are setting up a power project far away from the pit heads or using imported coal. So you may have a pass-through, but just imagine that if you have to wheel the power from the power unit which is set up at the pit head compared to the one which is using imported fuel, even with the wheeling charges, they included, the total tariff cost for the imported case will not work out.
Mr. Uppal, could another aspect also be seen where the mega power policy, which indicates that you have to, within the first 3 years of getting the initial provisional mega certificate, you have to start to direct and tie up power. If that is extended a little bit, that could also ease the pressure, because now there's a time limit also which sort of puts the pressure on.
I think empathy is very much required. The cost of capital today is so high. And also the cost of, and power industry basically is very capital intensive. So, and if anyone has to mobilize so much capital to set up, I think they want to be fairly sure about the returns that they have and not take any kind of exposure. Now the government has to take a very flexible attitude depending as to how the external factors impinge on the power sector. I think they must keep all incentives fairly flexible to keep the sector up and running.
Right. The other aspect obviously, and Mr. Uppal highlighted that also, was the taxation bit, the fiscal incentives via taxation. Mr. Rao, you want to come in on that? I mean, there are some talks of possibility extending tax holiday for the power sector under Section 80IA. Also, the removal of MAT could be another positive aspect that could come in. Service tax exemption to the power sector. Things like these smaller, fiscal incentives could make the difference.
Certainly extension of the tax holiday is one aspect, and that hopefully will be given, and for a fairly visible period of time so that the projects can be planned. The rest of it I am not so sure, because the fiscal space is somewhat limited. The challenge is not per se in terms of the tax stops and so on and so forth, but basically in terms of the decision making within the sector. And the 3 or 4 key issues which need to be addressed. You mentioned the issue about tying up of long-term contracts. Today the challenge is we don't have visibility from the state level on what the long-term contracts will be coming up in the next 5 or 10 years. In many other jurisdictions, the utilities are expected to give a prospective plan on the next 10 years, 15 years on what their procurement will be, so that the producers can actually plan towards that.
Gentlemen, we need to take a very short break. I want you to hold that thought. There's a lot more to discuss on the other side. We'll be right back after this short break. Welcome back to India Inc.'s Dream Budget, where we're discussing what the Finance Minister can do for the power sector. So one more aspect is the funding bit, and you had alluded to that in your earlier statement. Currently, what's the shortfall, particularly for private sector companies like yourself, in terms of getting funding going for projects?
But the funding, is a very important issue for the power sector. As I mentioned earlier, power sector is very capital intensive. If you have to set up 1,000 megawatt power plant, your total cost can be in the range of about 5,500 to 6,000 crores. And most of the financial institutions today are insisting for promoters' capital between 20 to 25%. So you can well imagine when the project costing 6,000 crores and you have to fork out 30% as equity, which is 1,800 crores, that's not something which is easily possible. How many companies in India are carrying this kind of cash on their balance sheet? Or even if they take the private equity on board, is not an easy proposition, because they all come with assurance of minimum returns on the capital they employ. So that itself makes it a non-starter. So I think the governments have to give the guidance to commercial institutions or any special purpose vehicles set up by government, that the equity requirement should be diluted from the 25-30%, which is what we witnessed today, to about 10%. So that, and the rest of it should be kind of term loans, and if possible, they should be given for a much longer period than what we have today.
Mr. Rao, would it be a significant kicker if lending to the power sector be termed under priority sector lending, and banks and financial institutions which are now almost touching the cap of lending to the power sector, if things are relaxed a little bit to facilitate fresh equity inflow from banks into power sectors, will that help?
It might not really help that much. First of all, the commercial banks, which have been the mainstay in the last 20 years, have already close to reaching the limits or breached the limits in some cases. So it's hard to see more long-term debt coming from them. We need to look at other sources. And as I said, two things we are not tapped significantly at all are ECBs and FDI. FDI in the sector is very, very low, and that purely reflects the fact that we don't have cash flows today that cover the costs. That really needs to be the first thing to be addressed to get any fresh money in the system. Otherwise, it's from one pocket to another. Equity is another issue, but given the returns that the companies are making in the last 1 year, and that's negative in most cases, it's hard to see how that will come in as well. Now, there are areas where we can address. If we refocus on the distribution where the incremental capital requirements are smaller and the returns are much higher, because there's a huge loss which is sitting there that can be recovered, I feel it will give a positive fillip.
Mr. Uppal, Mr. Rao just highlighted that obviously the scope to increase the cap at which banks lend out to power sectors, they're almost reaching the peak of that, and to extend that a little bit further may not be feasible enough. But there are other ways as well, and there are talks that possibly allow insurance companies to start investing in power. You've got IRDA guidelines which suggest that insurance company can divert their investments to state-owned institutions, so why not some of the power companies?
Yeah, that would definitely be very welcome. I think the insurance companies should certainly invest into this long-term investment. And there are very, very different vehicles which are available for investment. Earlier, government has also thought in terms of setting up an institution which is for what they call as a take-off funding. Whether it's an insurance company or any other vehicle which is created to make these kind of funds available, I think they would all be sort of very welcome in this industry. But as Mr. Rao said, I would agree with him that I think the most fundamental thing that we need to address is to make the returns in this sector more attractive. more certain, and the risk exposure of the sector must be reduced, which I'm afraid is not the case today.
Mr. Uppal, just another point, while we are talking about different modes of probably getting funding into power, you spoke about SPVs. Any sort of public participation that you think could be encouraged?
Well, you know that right now you have either the public sector like NTPC and HPC, which is in the power sector, or you have a purely private company which have come into this sector. Of course, a PPP route is definitely a third option which is there. This particular sector has not seen in generation any PPP participation so far, but I think that route is definitely available. I would just I'll hasten to add that distribution reforms must go hand in hand with adding more capacity. You can keep adding more capacity unless you really bring down the total losses which are there in this sector. I don't think it's going to really sort of change the fortunes of the sector. Today we have a very strange situation. You have the generation available, but the state electricity boards through which 85% of the power is transmitted and distributed, they're not willing to buy the power. The reason being that every unit they sell, they make more losses. So they would rather do more generation shedding than load shedding. And I think that's precisely what they're doing. And I think the bill which is pending with the government for the reform of SEBs is something which I think is extremely important, its passage. And once that happens, I think it will address one of the major issues that is facing the power industry for its long-term sustainability.
Mr. Uppal, while the government has been taking measures obviously to reduce the burden on several sectors, like for example oil and gas, where they are now opening up the sector as well in terms of petrol prices that's been deregulated, diesel price hikes are taking place. So in that light, for power generators who are selling power, for them also that flexibility for power increase needs to be given, and particularly from a state electricity board point of view, they should also be allowed to increase prices and sell them at market determined rates?
Well, you know that you have a regulatory regime when it comes to the power. You have the regulators both at the state level as at the central level, and they are very much involved. But when it comes to, so therefore when the power is being sold, they are either being sold through short-term and long-term PPAs, or they're being sold on a merchant basis against short-term contracts. So if you take the merchant sale, in that case, they are free to decide whether they want to sell the power, they don't want to sell the power. So that much, sort of freedom is already there. But I'm afraid that the way this whole system is working at this point, it's not really working out even for those who are in the business of merchant sale. The realizations in the last 1 year have been very low, and I think all of them are very worried lot.
Mr. Rao, we've spoken about a lot of problems in the power sector. The most immediate and the urgent fix that's required in which area, according to you? And the finance minister in his own scope can do what?
So therein lies the real problem actually, because the most significant issue here is decontrol of prices. We have done that, as you pointed out, in other sectors. Here the challenge is it becomes concurrent. So the transmission of prices from a global situation to what individual state regulators have to accept and pass through in the tariffs takes a fairly long period of time, as we have seen in the last several years. So this delay in transmission of prices effectively means, deregulation in this sector is really hard to come. One way to deal with it is to help improve the kind of conditions for competition. We've seen the ministry talk about deregulation above 1 megawatt, and I think it is actually time to start relooking at all these segments at the same time. One is more competition and deregulation, and second is to bring in more reforms in the distribution level. I think fundamentally we should also understand that any short supply here actually hits at inclusive growth, because the power cuts essentially are in the rural areas. And we are effectively looking at a fiscal, a capacity cliff, as it were, because a number of projects are being put on the back burner. Financing for them is not there today. So we will face a situation 2-3 years down the line where there will be huge capacity shortfalls on top of what we have today.
So Mr. Uppal, then I'm coming to you with the ambitious 12th five-year plan, where the talks of adding another 88,000 megawatt with the kind of problems that we just highlighted. Is that achievable?
But I am somewhat apprehensive at this point of time. I think the amount of capacity which was planned for execution, for which orders have been placed during the year 2012-13, has been far below the target. And as a matter of fact, I can't think of any private sector company which have decided to go ahead with a new project during the current year. There has been some capacity which is ordered by the public utilities, but all total, I think we are seriously deficit. Government has set a target of adding something like 75,000 megawatt of power capacity. I'm afraid that looks to be a very tall target, and until conditions are made more conducive and more encouraging, we might end up, sort of having a serious shortfall when it comes to addition of new capacity. While I say this, I just want to, respond to one common observation which was made earlier, that you're talking about having a deregulated regime within the power. I think, if you look at that from the point of view of just generation, that's not going to be enough. I think it's very important that we also have the private transmission lines and private distribution networks which also come up concomitantly. Because today the bottleneck is not only in generation but also in transmission and distribution. We have glowing examples of cities like Delhi, Mumbai, Surat, Kolkata. If the private sector has to effectively participate and make the power tariff market very competitive and also improve the delivery efficiency to the final customers, it's very important that the private sector is also allowed to participate in the transmission as well as distribution of power. We already have some glowing examples of the private distribution which have been a great success. I think the users are happy and the power the distribution companies have also been able to survive and grow in a reasonable way. So I think that is one sector where the reforms must take place and we must draw inspiration from the successes which have been made in the past.
All right. That's a very exhaustive list of problems that the sector is facing and what the government needs to take note of and probably do something about it. Mr. Uppal, Mr. Rao, thanks very much for joining in this discussion. It's provided a whole new different light of the problems faced in the power sector and what the government can do. And to our viewers, thanks a lot for watching.